Hi everyone, let's go through all my preferred scenarios, both bullish and bearish, including potential trading setups. Starting with the macro bearish scenario, where this is a wave 1, 2, 3, 4, 5, and we're now in a corrective structure, which is a WXY. I don't really like this wave 4 of the impulse, as wave 4 is really short in this scenario, and usually a wave 4 is longer in time compared to wave 2, but in this scenario wave 4 is much shorter, which is pretty rare. If we then look at the correction, we have a W over here and X, and eventually looking for a Y to the downside with a minimum target of 12.6k, but also other potential common targets are 7.5 and 5.4k, but definitely the first one I'd be looking for is between, let's say, 12 and 10k, as we also have this support resistance area over here that we haven't seen since the bull run in 2020. If we then go to the macro bullish scenario, this is again a wave 1, 2, and then wave 3 is over here. This is wave 4, and now looking for wave 5 to the upside, with the most common target area for wave 5 between 98k and 174k. In this scenario, wave 5 has ended right on top of the 0.5 fib, taken from the low of 2 to the high of 3, which is a maximum target for wave 4, so it's very valid. Also, the low of wave 4 was exactly made on top of the 0.618 fib time, taken from the low of 2 to the high of 3, and we also had a very nice volume peak at the lows, which is important as these can signal reversal areas, just like it did here with wave 2. At the end of this wave 2, the COVID dump, which simply was a wave 2, we had a very high volume peak, before then an incredible move to the upside, so this can hint at potentially that. Again, the target area between 98 and 174k, but the rare target areas between the all-time high and 98k. If we then go to the high time frame scenario, and I'll switch to the daily, the bearish scenario in a little bit more detail is the following. We have the WXY over here with inside the X an expanding flat, which is an A, B, C over here. Wave B ended perfectly in the target area for wave B, and an expanding flat between the 1.236 and the 1.38, taken from the low of W to the high of A. In this final leg, wave C, we're then looking for a 5-wave structure, which is a 1, 2, 3, 4, 5 in my opinion, with wave 4 ending over here right on top of the 0.5 fib, again taken from the low of 2 to the high of 3 for a very nice bounce to the upside. The target has been reached for this wave 4, as now we are ranging inside this wave 5 target area, the 1.236 and the 1.618, taken from the high of 3 to the low of 4, while we are also inside this white box over here, which is the most common wave C target area. So this is actually a very important range, and wave 5 might already be finished. Another thing to note though is that the maximum target for this wave 5, the 1.618, sitting at 29.6k, has confluence with the 0.382 over here, which is pulled from the all-time high to the low of W, which is usually a minimum target for a wave X. So the 29.6k level, if we would move to the upside once more, is definitely an interesting level. And for this potential trading setup, been saying it for days, shorts in this setup are laddered inside this area, stop loss somewhere safely above, as in this bearish scenario we're expecting a big move to the downside. So that's why the invalidation for me is all the way up here. Also because wave 3 is extended already, so it's very rare for wave 5 to also have an extension and have 2 extended waves in one Elliott Wave's impulse. If we then go to the bearish or the bullish scenario over here, then we have in the move down a WXY XZ. In this scenario, wave Z ended at the 0.618, which is a rare target for wave Z, pulled from the all-time high to the low of W to then the high of X. However, as we know from the macro, we also have the 0.5 fib over here, so it can't really go much deeper, because else wave 4, and this is a wave 4 and now looking for 5, wave 4 would be invalidated. Now, wave X just missed out on hitting the 0.382 as a little detail. That is relatively rare, gotta be honest, because usually it's a minimum target, but in this scenario this still works. In this bullish scenario, we would then be looking for wave 1 to finish somewhere over here, or maybe a little bit higher. Doesn't matter too much, as in this wave 1 we would be looking for wave 1 to end and then eventually go down for a wave 2. Most common targets for wave 2 are between the 0.5 and the 0.786, which is basically between 21 and 1k and 17.7k. And out of these most common targets, the golden pocket over here is by far the most common target, which also include these lows. and that could be a very nice liquidity grab for then eventually more upside with the targets as mentioned of like 100k. And the short setup is basically the same as the bearish scenario for wave Y. It's entering around this area, stop loss safely above, trading it to the downside. If we then go to the medium time frame, you'll see that the bearish and the bullish scenario are basically on the chart, both of them, because we have wave X over here and wave 1, because for this potential trading setup, it does not matter. Both of these scenarios have a 5-wave structure over here, which has the same target for wave 5, which is the box that you see over here, the white area that we're ranging in now. Wave 5 might already be in, as I will show you on the lower time frame counts, but the trading setup is the same. Again, laddering the potential shorts here, stop loss safely above, trading it to the downside. The only difference is how long are you going to keep this trade? Because for a wave 2, the maximum target usually would be the 0.786, the 886 is very rare, but somewhere here would be the target, but for a wave Y, the target would be much lower. That's a very big difference. And also the time it takes for these waves to form is also a big difference, because if this is a wave 2 coming in, usually a wave 2 is at least going past the 0.382 fib time taken from the low to then the high of wave 1, which is currently sitting at the 4th of May. And it can take all the way till the 1-to-1 at least as well, which is sitting at the, I'm struggling here, which is sitting at the concise on the 4-hour. I believe out of my head it's the 4th of June, no, 17th of July over here. And if we then look at the fib times, as you can see for wave Y, these are pulled from the all-time high to the low of W. You can see wave Y targets are a lot longer. So wave Y we would expect will take a lot longer as well compared to a wave 2. If we then go to the low time frame scenarios, I have 3 scenarios instead of 2 that I like to share you. The first one is the very bullish scenario, where this is a wave 1 on the high time frame, this is a wave 2 on the high time frame, and we're now in a very big yellow wave 3 to the upside, which then has as the beginning a 1-2-1-2 before a massive 3 to the upside. Don't really like this scenario, as wave 2 is really short. It hit about the 0.236 fib time instead of the 0.382, so it's really short. And if we then look at this scenario over here, wave 2 did not hit the 0.382. It actually just missed out on hitting this 0.382, which is not something I really like to see. And then we have over here a blue wave 1, followed then by this blue wave 2, which finished down here. At least it should be finished down here, because it's already taking ages, this wave 2. It almost hit the 1.618 fib time, which is compared to wave 1. And also wave 2 now bounced twice on the 0.382, which already is a rare target again for a wave 2. So in this scenario, what you want to see is you want to see big candles with big volume to the upside, because now we are in a wave 3 of 3. We are in wave 3 of yellow, wave 3 of blue, and wave 3 of green, and wave 3 of blue. So this is the time that volume should kick in. Where is it? You know, where is the volume? I'm not seeing it at the moment. So it's just, I'm really, like, this scenario is still absolutely valid, but you need to see the volume kicking in. And so far, it's not. So, you know, not that likely at the moment as it stands. We want to see the big candles, big volume, and that's when that scenario is going to be valid. Then the second scenario is the one that I have over here, where wave 5 ended right there, and this is an expanded flat in W. Then we have an X, and this is a Y wave, and then this WXY is part of a bigger A, now looking for a B, preferably an expanded flat, with this then being an A, B, C, so that we can take out the double top that we have over here for some liquidity as well, before then a very big move to the downside for a wave C. Now here you can see that price bounced perfectly at the moment on top of the wave Y target, which is the 1 to the 1.236 taken from the high of 5 to the low of W to the high of wave X. So that is very nice. And as mentioned, the trading setup before this wick and stuff already happened, I said we had a double bottom over here. So the only way this trading setup is valid is if we wick below the double bottom, close above, and then trade it to the upside. Now I really like the 15-minute chart. That's my main chart as well. And on the 15-minute, the candle closed right about here, which then is in this potential trading setup, the entry, stop loss below the wick, trading it to the upside in that scenario, with then targets in this scenario being the wave B expanded flat targets, which would be from the high of wave 5 to the low of this wave Y. Then we toggle on the wave B, expanding flat targets, which would be somewhere between 29k and 29.4k. So this is currently quite interesting. And then the final scenario that I like to show you is the WXYXZ. Wave 5 again ended over here. We then have a W, X, and eventually a Y, but now we are looking for a wave X and then eventually another move down in a wave Z. Not too sure, honestly, if I like another move down, because if we look at the support, there's not much support below this wick. Actually, in my opinion, the first real support area below this wick is all the way down here at basically 24.8k to 24.3k, and that's quite a dip, of course, especially if this is a wave Z. Wave Z should not go this deep compared to the W and the Y as well. So that would be a stretch. Wave Z could wick below over here and then move up again. That would be valid, but I wouldn't like to see it all the way down here, as that would be quite an invalidation, I suppose. But in this scenario, the trading setup was exactly the same. So trading, entering the longs inside this area and then trading it to the upside. Most important target for this scenario, however, is this target box that we have over here, which is currently sitting between, let's see, 27.9k and 28.1k. As we have a daily, a weekly, and we also have the golden pocket, including some highs. However, all the fibs that you see over here, and that makes X quite difficult to trade, all the fibs that you see over here, taken from the high of this X to the low of this Y, are target areas, target fibs, I should say, for wave X. However, the only real fib that has confluence as well with other stuff is the golden pocket, which also happens to be the most common Fibonacci retracement for X as well. So yeah, this is still an interesting area, which then also would be the target for this potential long. Of course, the wave B, as just shown, is up here. So it all depends on how we're going to approach this area. But one can expect at least probably a little bit of a retracement when hitting this area, or we just push straight through. That's fine as well. It doesn't matter. But the potential trading setup, short at least in this scenario, would be to enter the shorts over here, stop loss somewhere safely above, and then trading it to the downside for wave Z. Again, we are in a bullish environment, so shorts at the moment are still a little bit more risky. And as you can see, that all the low time frames at the moment are basically locally long setups that are all taken from this wide target box area, so should be in profit already. Trade safe, trade with your brains as well, and based on statistics, not emotions. And yeah, in the swing failure pattern trade, for sure, is that by now with the swing failure pattern trade, the stop loss should definitely be break even for then a continuation to the upside, or a hit of the stop loss at break even. Both are fine. Entry was down here, so that's completely okay. So yeah, it all depends on how long one can keep the potential long trading setup. Wave X is the shortest potential long trading setup, basically. Then we have the wave B, which is a little bit longer with a little bit of a higher target. And then you have the potential for this wave 3 for eventually a massive move to the upside. I hope this video was helpful or valuable to you, and I'd like to thank you for watching and subscribing, and I will see you at the next one. Bye bye.